Welcome to the Capital News. I am your host, Alex Karitis. Today is Thursday, May 7th, 2020. Thank you so much for joining me. The title of today's podcast is Depression Level Unemployment. We're going to get to all of that market data. But first, a quick shout out to my grandma because it is her birthday today. So happy birthday, Grams. We love you. She is not a happy camper when it comes to being quarantined and locked down. She loves to be on the move, so she does not like being shuttered in place, believe me when I tell you. But she does have to take this into consideration. One of the perks is, because we're shut in, her grandchildren are not bothering her too much, not banging down her door, so she can cook delicious meals for us. So she's had a break for about a month and a half, but I think she's ready to start cooking up some good stuff for us, and we're looking forward to it. But today's your day, Graham. Enjoy it. Many more. We love you, and we're very, very blessed to have you. So, depression level unemployment. Initial jobless claims above forecast at 3.2 million. The number of Americans filing for unemployment benefits was 3.169 million in the week ended May 2nd, compared to a revised 3.846 million in the prior week, and market expectations were that of 3 million. Last week's filings lifted the number of people who filed claims for unemployment benefits to 33.5 million Americans, 33.5 million, equivalent to 22% of the working age population. The 4-week moving average, which removes week-to-week volatility, eased for a second straight week to 4.174 million. So over the course of the last 7 weeks, we have 33.5 million Americans filing for unemployment insurance. A true travesty, no ifs, ands, or buts about it. Then obviously tomorrow is going to be the jobs report, so non-farm payrolls seen falling the most on record. The U.S. economy is likely to shed a record 22 million jobs in the month of April. 22 is the projection. Jobs lost in the month of April alone. We also have U.S. job cuts, highest on record. Job cuts announced job cuts by U.S.-based employers jumped to 671,129 in April, the highest single month since the total has been counted going back to January of 1993. So that's why today's title is Depression Level Unemployment. But how did the markets do? Well, they couldn't care less. They couldn't care less. And this has been the norm for the past several weeks. When it comes to the initial jobless claims number, the markets have rallied. Forget good news is good news. Forget bad news is good news. It is now horrendous. Depression level data is now good news for the stock market. All the major indexes were up about 1.5% depending on the index. Overnight, right now in the futures trading, we have the Dow Jones up 1.3%, the S&P 500 up 1.4%, NASDAQ 100 is also up 1.4% at the time of this podcast. The Nikkei, the Japanese market, is up 2%. Across the pond, UK was up 1.4%, Germany was up 1.4%, France was up 1.5%, and it was green for the Italians and the Spaniards as well. Right now, we have the Australian market also up about 0.7%. On the commodity front, WTI trades at $23.83. A barrel Brent is at $29.80. A barrel natural gas pulled back slightly, $1.90 per million British thermal units. Gold and silver had a nice day today. Gold is trading at $1,715 an ounce. Silver is at $15.39 an ounce. Uncle Sam's 10-year Treasury note took a little bit of a hit on the yield side. It is now yielding 0.63%. So there you have it, folks. Horrendous news is good news for the stock market as the data came out today and even in overnight trading. And of course, we had some stupid headlines once again back in the news with discussions of a phase one trade deal, obviously with China, which was signed. But of course, there has been a little bit of rhetoric, again, going to yesterday's podcast of the blame game. Will the Chinese make good on it? Will the President of the United States walk away from it? What's going to happen? And now, oh, no, everything's going to be okay. We're going to have a phone call next week. Phase one is still, everything's going to be okay. Give me a break. Give me a break. Are we going to have to deal with this for another 4 years if this guy wins re-election? Because I'm sick and tired of it, for one. And what a predicament we're in. Because I can't stand another 4 years of this personally. And I don't want Joe Biden in there either. This is the best this country can do. I mean, seriously. And we are in a depression. All right? The numbers are there. There's no ifs, ands, or buts about it that we are in a recession. It's going to be a severe recession. And if history is any guide, and that's what I use to base a lot of my analysis and judgment on, what the government has done in conjunction with the Federal Reserve is all but guaranteeing that a depression in this country will take place. And of course, that will be felt around the rest of the world. So there would be basically a global depression. I take no pride or pleasure in saying this, but this is the analysis I come to. Reviewing the facts, reviewing the data, not just the headlines. Opening up the hood, looking underneath, seeing what's going on, moving some things around. Does it make sense? Connecting the dots, painting a picture. The things we do here at the Capital News Podcast. We have a pretty good track record, by the way. This is insanity. I don't understand how these markets can be called markets. If it is a perpetual money-making machine, then it's not a market. It's a perpetual money-making machine. It's not how they're supposed to work. They're supposed to find fair value. And I'm telling you, I can only imagine how much fraud is being covered up by all of this money spending at the federal level and from the Federal Reserve. Because we've talked about this briefly before, and there is a thing known as the fraud cycle. The fraud cycle, okay? They come in waves, somewhat predictable. This is what happens. So nobody should be caught off guard when you start to see major corporations, oh my goodness, they were engaged in accounting fraud or God knows what else. But if you can continue to flood the markets with liquidity, if you can continue to bail out the good old boys club, which is exactly what we are in the midst of doing, again, a financial and economic coup d'etat right in front of us, nobody bats an eye, you have to understand what's going on here. We've talked about Harry Markopolos before, last fall, announcing fraud at General Electric. Now, of course, that's his opinion. Maybe he's correct, maybe he isn't. I'm saying that he is. To what degree? Time will tell. Time will tell. Or maybe we'll never know. Because GE could be getting bailed out behind the scenes. They're being taken care of, etc., etc. This is the ridiculous of it all, right? Because part of a fraud cycle before was Enron and WorldCom. You remember those two behemoths? This is what I'm talking about. And nobody knows the degree to which these people are committing such fraud except those who are committing it. So it's only a shot in the dark for us to put a number on it, a guess, how bad it is. But what do you think? When you have corporation after corporation, it doesn't matter the industry, the sector of the economy, it makes no difference, squandering their resources, using so much of their cash flow, so much of the debt that they took on, which was basically for nothing, of course, because we've been living in a world of extremely low interest rates. And instead of putting a lot of that to work for investment capital expenditures, a lot of it went into share buybacks, as we well know. Well, now they come to bended knee to Washington, D.C., which means us, to get bailed out. And the president, the vice president, their economic advisors, the secretary of the Treasury, they all come out and say, well, it's nobody's fault. It wasn't their fault. There's justification to use our money. Well, are we going to have oversight of this, Mr. President? No, the Inspector General that's been assigned to this, no, he's fired. There's not going to be any oversight. No, not going to do that. And then when the states start to line up because they're broke too, that's where we draw the line in the sand. And again, we are against all bailouts. But it just tells you who these people work for, isn't it? It's unbelievable. Because the states, they don't contribute to your political coffers, so screw them. Screw them. But the airline industries, the banks, energy sector, everybody else, give them billions and billions of dollars, trillions of dollars in loans, guarantees, grants, a mixture of everything. Federal Reserve balance sheet at $6.7 trillion. We'll give you the update to that here shortly. 33.5 million Americans unemployed in the last 7 weeks, and the markets rally. I mean, what's concerning, too, is you have a lot of retail investors, your mom and pops, your average Joes, starting to get back into the market. In fact, they've been back in the market for quite a while. And what concerns me most here, obviously, is this that bull trap that we've been talking about for quite a while here in these rallies? Because if we are, in fact, in a bear market, which I still believe that we are, some of your biggest counter rallies are known to take place in bear markets. Now, how many average Joes and Janes are aware of this fact, right? Are they really levering themselves up? They're taking on margin to go long because they think this is a perpetual money-making machine? And they might be right, and maybe they make a ton of money, and maybe they get out at the right time, and everything's okay. Or maybe this charade just continues going, that it truly is a perpetual money-making machine, that nothing can go down. And if it does, it's just a fluke. And that what it is, it's buy the dip mentality. Just buy the dip, and up away she goes. That's not a market. I mean, anybody who's ever taken a finance class or an economics course or an investment course or tried teaching themselves by going to a bookstore or online and just reading, it's all out the window at this point if that's what comes to fruition, that this just becomes a perpetual money-making machine. It can only go up because we know from statements from Jay Powell, the chairman of the Federal Reserve, when the markets go down, they're not functioning. Really. They're not functioning when they go down, but when they go up, everything is priced to perfection. That's what's supposed to take place. That's not a market. Because what you're doing here is, how many people are going to be suckered in if it proves that this is not a perpetual money-making machine? How many people is that going to hurt who thought they could just get away with everything? It's fool's gold. It's, hey, I can't lose. And then the rug is pulled out from underneath them. How many young people, millennials, and other younger generations, Generation Z, might be putting some money in the market thinking they're doing the right thing, not aware of any type of market history, never been around for a bear market. Do they know how to navigate these waters, navigate this terrain? I highly doubt it. It's going to be a rude awakening. And then what is that going to do to that generation or generation's psyche moving forward? Will they trust the markets moving forward? Or are they going to say, oh, hell no, I'm not putting my money back into there? What will that do to any semblance of American capitalism? This has huge ramifications because the stock market is not a perpetual money-making machine that always goes up. Just not how it works. And we're also going to talk about usdebtclock.org. We'll get on that here shortly here and read off some of those numbers because they're going to make your head spin, as they always do. It's appalling. It's a crime. And there's no responsibility being taken whatsoever. Depression-level unemployment. These numbers have dire and direct consequences. That's why we're starting the series on capital economics presentations with debts and deficits. Do they matter? And we strongly believe that they do. People just can't seem to connect the dots. They just think that somehow, some way, the debts and the deficits are completely mutually exclusive from everything else. Bankruptcies, fraud, unemployment, low GDP, running a double deficit or dual deficit with the trade deficit and obviously the budgetary deficit. Oh, no, it has nothing to do with it. No. It's completely mutual. It has nothing to do with it. The modern monetary theorists are here. They're extremely excited because they don't believe that debts and deficits matter. So then why are you taxing us? Or is that next? Because I do think when it comes to paying for all of this, ladies and gentlemen, they're going to be raising our taxes quite considerably. So like we've been saying here for months, really since this podcast has been on for over a year now, you want to have these tax cuts? Fine and dandy. I want the income tax abolished. I want the payroll tax gone too. I want the Federal Reserve abolished. But you know what? If you're going to do that, you have to have a plan in place to do it. And if you're going to cut taxes, you also have to cut spending. Otherwise, all you're doing is putting more money in my right pocket, maybe, just to almost guarantee that you're going to be taking out more money out of my left pocket at a future time. And that is exactly what's going to take place because we're about to borrow $3 trillion in the second quarter alone. Again, for context and perspective, the federal government brings in $3 to $3.5 trillion per year. That's 12 months. In 3 months, we're going to spend all of it. And what did we get out of it? Nothing. We got nothing out of it. There was no investment. There is nothing that is going to pay dividends on the other side of this. This is all funny money being printed up, and free was never so expensive. And we're not done. We are not done, because this assumes there is no second wave. This assumes that what the government has been telling us, that there's going to be some sort of V-shaped recovery, not just in the stock market, which of course is what's already been taking place, but in the broader economy, which is what really matters. Remember, we did that podcast too a couple days ago, the real economy. Those 33.5 million Americans plus their families who are affected by this. And of course, the president comes out and says, well, the jobs number is going to be artificial. Is it? I wonder if all of those people who are unemployed feel artificially unemployed, or if they really feel unemployed. These are the games that are being played, and I, for one, am sick and tired of this rhetoric. Depression level unemployment, well, it's just artificial. It's just artificial. Social distancing, the psychological effects, the social behavioral changes that are likely to ensue. People aren't just going to jump back into the deep end of the pool. Some people will. Some people will, but the majority of them won't, because people are going to be concerned that there aren't ready therapies. There is no vaccine yet. I don't want to get my mother sick. I don't want to get my father sick. I don't want my kids getting sick, etc., etc. This is going to have implications. It's going to take some time. If it ever gets back to quote-unquote normal, and again, it wasn't normal. There wasn't anything normal about living beyond our means, paycheck to paycheck, using credit cards to make ends meet. That ain't normal. That isn't a sign of a healthy economy. That's not a sign of a healthy society. It's one of a sick society as far as I'm concerned, that puts too much emphasis on consumerism and material possession. And look where it's gotten us. Look where it's gotten us. All of the jobs that were created over the past 10, 11, 12 years have been wiped out in a matter of 5 weeks. Then some with the following 2 weeks. 33.5 million. And don't forget, these numbers are going to continue to be skewed because of the payment protection plan, the PPP loans that are out there that are keeping some people on the payroll, even though their business might actually be shut down and nobody's working. And you also have to understand, too, ladies and gentlemen, how the unemployment rate is counted by the federal government. Because if you have been a discouraged worker, okay, for over a year, meaning you're done, you gave up, you tried looking for work, can't find anything, you're done, you're discouraged for over a year, you are not counted. Even though you are technically unemployed, the government doesn't count you. However, if you are a discouraged worker, but for less than a year, then the government will count you, but that won't come through in the headline number, which is the U3 number. And we explain all this, capital economics presentations, you can check those out. But the U3 number is the headline figure. That doesn't take into consideration all of your discouraged workers. Again, for less than a year. You got to go to U5, U6 to get that bigger number. But even U6 excludes Americans who have been discouraged for over a year. And you also have to take into consideration that you're talking about an unemployment rate that prior to all of this was about 3.4, 3.5%. All right? So now, per the article that I just read off here, you have about 22% of the working age population. All right? That's what the 33.5 million is equivalent to. So what type of unemployment number, just on the U3, the headline figure, are we going to get tomorrow? It's going to be in the double digits. The question is it going to be 19%? Is it going to be 22%? Is it going to be 25%? Because you have to remember, in the depths of the Great Depression, unemployment topped out at about 24.9%, and that's when the government was counting everybody. You're unemployed, you're unemployed. But as we've progressed through our republic, which is now a banana republic, we've changed a lot of definitions. We've changed a lot of the techniques to how things get counted and measured. No surprise, right? And who do you think that benefits? That's what you have to ask yourself. So 33.5 million Americans unemployed over the past 7 weeks. From a continued claims basis, this number has also been updated. Last time we spoke about this, we had a number that was about 18 million on the continued claims number. We are now up at 22,647,000. So 22.6 million continued claims. This was updated on April 25th, so there's still a slight lag. We'll keep you updated as that number gets populated further. On the Federal Reserve front with their balance sheet, again, it seems to be plateauing, much to my surprise. I think this is just sort of a little bit of a period of consolidation before they start another round of serious liquidity injections. So last week we were at 6.65 trillion with a T. This week we were at 6.721, so an increase of about $66 billion. Still nothing to sneeze at. I mean, I'd like to have $66 billion in my bank account, wouldn't you? But still, nonetheless, an increase of over $2 trillion over the past month and a half. And, of course, the Federal Reserve is standing at the ready to expand any facility to do whatever is necessary. And again, with very little to zero oversight. So much for a system of checks and balances. Now to the U.S. debt clock. All right, you can check this out, usdebtclock.org, and I do suggest that everybody takes the time to do so. You know, add it to your favorites. Look at it every once in a while if you have the stomach or the nerve to do so. But the U.S. national debt has now eclipsed $25 trillion. You know, it was about a week ago or so, maybe not even. I have to check the date as to when I put it up there. But that one capital economics presentation, again, with that debt and deficit series, I clocked it in at about $24.5 trillion. So within a very short time frame, we've added another $500 billion plus to the U.S. national debt. So again, U.S. national debt is north of $25 trillion and counting with no end in sight. They break it down for you on the site. Debt per citizen, it's about $76,000. So go ahead and reach into your pocket, be a good American, and write Uncle Sam $76,000. I'm sure everybody has it at the ready. Debt per taxpayer, get ready for this one, $202,000 per taxpayer. So if you're a taxpayer, really pony up that dough, $202,000. Make it out to Uncle Sam. He will cash it, believe me when I tell you. U.S. federal spending, $6.2 trillion, giving us a current budget deficit of $2.6 trillion. And of course, that is projected by the end of September to eclipse, well, in my opinion, it will, $4 trillion. According to a watchdog group, according to the CBO, the Congressional Budget Office, they think it'll clock in at around 3.8. We think it'll be north of $4 trillion by the time it's all said and done, because we still have other negotiations taking place in the White House and in Congress. So something else is going to happen. Will it be something that is going to include a state bailout? Is it going to include payroll tax hikes, payroll tax vacation, at least through the end of the year? Will that bring infrastructure? Who knows what it'll bring, but it'll probably be in the tunes of hundreds of billions of dollars, if not trillions. If we bring in infrastructure front and center, it very well could be in the trillions of dollars. And of course, to have any type of major quote-unquote stimulative effect, they're going to have to get that money out the door as soon as possible, which will, of course, contribute to the spending, which will, of course, contribute to the deficit and, of course, the national debt. Now, as I highlighted in that capital economics presentation, you know, there were projections earlier this decade, 2018, 2019, you know, maybe we'll get to about $30 trillion of U.S. national debt by 2030. And a good way to remember that was 30 by 30, right? 30 trillion by 2030. Well, the path we're on, we can get there within a year or two if this continues. And I do believe it's likely to continue. Maybe not to such a degree, but with trillion-dollar deficits, yeah, most definitely, especially if it turns out that this is not just a severe recession, but a depression. Yeah, there's no question it's going to be multi-trillion-dollar deficits per year for as far as the eye can see. We're already at 25. Again, 2.6 on the official budget deficit right now. You got to tack on another 2 just to make the projection. So that takes us to 27 trillion by the time we're at the end of fiscal year 2020, which again is at the end of September, only 5 months away. So what's going on here? We'll be at 30 trillion before you know it. How are we going to pay for this? Who's going to pay for this? Does anybody care? Are we going to default? Are we going to inflate it away, hyperinflate it away? Because you're talking $30 trillion. I mean, screw inflation. This is going to be hyperinflation. Are we going to default? Are we going to do that to our credit rating? Will other countries ever trust us again to buy our debt? Because the president likes to say, we're the world's bank. No, we're not. We're broke. We're broke. And if those numbers that I just rattled off to you, if you don't get that, then you're beyond help. I don't know what else you want me to tell you. Because we have a printing press and we're the world's, reserve currency, I mean, that gives us a little bit of a standing. But, if this is a three-legged stool, we're down two legs. That's all we got left is a printing press and the fact that we are the world's reserve currency. How much longer do you think those things are going to last? Because it all comes down to that word credibility, right? Are we going to make good on our debts? And how are we going to do it? Because we're not going to grow our way out of this. I mean, this is just arithmetic. As it would have to be astronomical rates of growth per annum to put a dent in this thing. And when you're heading into a recession or a depression, newsflash, ladies and gentlemen, that means you're not growing. But if the government continues to do what it's doing, and it most likely will because that's all the government knows how to do, when your only tool is a hammer, everything looks like a nail, huh? And that's what they're going to do. They're going to continue to hammer and hammer and hammer. Print, 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 spend, 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 money we don't have. Free was never so expensive. So get ready for the other side of this, how taxes could skyrocket. They could put it on corporations, on individuals, capital gains, the whole lot. What about your retirement? Especially people who are going to be entering retirement, who might be lucky enough to have a pension, a 401k. If you got to take a mandatory withdrawal from your 401k, what are they going to make you do with it? Are they going to raise the taxes on it? Probably just when you need it most. To make sure you can make it through retirement. Maybe save something to give to your kids, grandkids, or to some cause that you're fond of. Oh no, you got to give it to Uncle Sam because he knows best. You got to give it to some Republican or some Democrat because they know what's best to do with your hard-earned money. You understand why I've been calling for a peaceful revolution to leave these parties immediately? Because they have left you, they have abandoned you years ago. They don't give a damn. If they gave a damn, you think we'd have $25 trillion in debt and growing? You think we'd have $100 trillion in unfunded liabilities and growing? Those are your promises. That's what that means, the unfunded liabilities. That's your Social Security promise. That's your Medicaid, Medicare promise. Not here. It's not going to happen. It's not going to happen. And if you pay close enough attention to this podcast, you understand how the government screws you twice because we've been through that, how they calculate CPI, your cost of living adjustment. They tax you for 40 years. And then when it's time for them to make good on Social Security, they say, oh, well, your cost of living isn't as high as it is. But because everything's tagged to the numbers we come up with, yeah, maybe you should be getting $2,000 a month. Now you're only going to be getting $1,200 a month. Did you sign up for this? I didn't. I don't support this. I didn't vote for this. That's why I wrote my letter, Representation and Recourse. Check that out on thecapitalnews.com. Outlining everything that has gone, well, not everything, my God, that would be a book, maybe an encyclopedia, of everything that has gone wrong prior to COVID-19, and now conveniently they are going to use this pandemic to get away with murder, and that's exactly what they're doing, a financial and economic coup d'etat of the United States of America, in addition to other countries around the world, but that's their problem. I'm an American. I'm concerned about this country. And $25 trillion ain't going to cut it. Ain't going to cut it, and they're not going to do a damn thing about it either except make it that much worse. So $25 trillion today, mark it down, because in 5 short months it's going to be $27 trillion, if not more. If not more. And unfortunately, the people and the generations who are going to have to pay for this are the people and generations who had absolutely nothing or very little to do with it. Is that moral? Is that ethical? Is that American? The answer is no, no, and no again, just in case you were curious. And lastly, I know there's been some headlines, some noise in the media today with Michael Flynn. Department of Justice, I guess, is dropping all criminal charges against him. This is just complete political theater now. This is already going the way I had explained that it was likely to head. And that's what we're seeing. Because again, it goes to that word credibility. The president has none. And so when you go through the various channels and when you go, on social media, like on a Twitter account, and you're looking at news stories and people who have obviously opinions on this, on either side of the coin, happy that Michael Flynn, these charges were dropped against him. Of course, he's still not out of hot water yet. but at least those charges have been dropped from the Department of Justice. And then, of course, you have those on the other side who say, oh, no, he pleaded guilty. He lied to the vice president. The president fired him. He's guilty. This is just, what is it? You know what it is. This is just Donald Trump weaponizing the Justice Department with his attorney general, who is acting like his defense attorney, William Barr. This is exactly how I said this was going to play out. The facts don't even matter because everybody's already siloed in. We're 6 months away from a presidential election. The facts be damned. They could have this thing dead to rights, and half the country's not going to believe it because they're going to say this is Donald Trump abusing his power, weaponizing the Justice Department. It's exactly what I said. That all could have been ignored. Never could have happened. That argument never could have carried any water whatsoever if this president could simply tell the truth, if he could forego the exaggerations, the hyperbole, and the outright lies. But he can't help himself. So now we're going to have a country, facts be damned, the truth be damned. It's just a matter of what you think. He's a crook. He's a criminal. Oh, this is what we've been waiting for. We told you the deep state was corrupt. Everybody's already in their silo. That is what is wrong with this country. One of many things. One of many things. And this now is going to come front and center, and it is going to be used for the next 6 months as a political talking point. Despite the fact that the president fired this man, he now wants to have it both ways, which he attempts to do with so many other issues. So I'm not even getting involved with this. There's enough coverage of it out there. This justice system in this country is just like everything else. It's a two-tiered system. So we'll see how it plays out. But I'm more concerned about the depression-level unemployment figures and those 33.5 million Americans who are unemployed and how that affects them and their families personally, and how we have $25 trillion in debt and counting, and nobody gives a damn. Ladies and gentlemen, thank you so much for joining me. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.